Also this morning, it was a record-breaking week on Wall Street. Not in a good way, though. When Good Day returns, we're going to break down how to protect your retirement from all the ups and downs, so hold on tight. All right, thank you so much, Corey. At 7:14, if you've been keeping an eye on your investments, you know it's been a rocky week for the stock market. The Dow losing almost 400 points Thursday alone, getting off to a worst start of the year ever. Joining us right now in the Good Day Chicago studio is Michael Ruggiero, financial advisor with Ameriprise. Brian, thank you for joining us. Why does what's going on in China have such a ripple effect around the world?
Well, for the last 8 years, China has pretty much been a leader and has been propping up the global economy. And there are a lot of geopolitical concerns there right now, as well as the fact that, yes, they're slowing down, their economy is slowing down, their growth isn't as robust as it used to be. So it is having this ripple effect around the world.
So it's affecting things, importing and exporting. And why should people at home sit back and say, I care about this one. I'm looking at my money. I should care about this one.
Well, they should care about it because it's affecting their money. The stock market in the U.S. has lost 10% from its highs in May, and it's already lost 5% in this calendar year alone, and we're only, what, 8 days into the new year. So they should be concerned about that, yes.
So concerned, and how do you protect yourself from this volatility?
Well, it depends on your investment timeline. I would stay within companies that derive their balance sheet in U.S. dollars, so I would stay here in the U.S. The U.S. essentially really is still the best, or it's the best house on a bad block.
So how could this affect? A lot of people sit back at the beginning of the year. We're just a week into the new year, and you've set some financial goals for the year. So how can you protect yourself on those?
The first thing that you don't want to do is you don't want to panic, and that is the knee-jerk reaction of a lot of people. We've had, I believe, $2.5 trillion moved out of global equities and put into what would be considered safe havens, such as cash and other types of securities. So don't panic is really the main thing.
And what about interest rates? What kind of effect is this going to have on those?
Well, everybody makes a big deal about interest rates, and I find that interesting because when the Fed raises interest rates, what that's indicating is that the U.S. economy is strong enough to stand on its own. They don't need all of that free money or all that, you know, QE3 easing that's been happening in the last 8 years. So the fact that they're doing that indicates that they believe that the U.S. economy is strong enough to stand on its own.
And before we let you go, within the hour, the jobs report is going to come out. What can we expect to see?
I don't know what we can expect to see, but the anticipation is that we should be able to add 150 to 200,000 jobs in this report, and moving forward, month after month moving forward. Also, they expect hourly wages to increase this week by 3%, if I'm not mistaken.
All right, Michael Ruggiero with the Ameriprise. Give us your web address if people want more information, because there's a lot of nervous investors out there.
You can go to ameriprisefinancial.com. / Michael D. Ruggiero. Thank you.
Ruggiero is one of the among the top 3% advisors right here in the city, right?
Yes, I am. That's correct.
Good deal.